Hey, YouTube. Marshall here. Welcome back to The Realignment. Got a great episode for you today coming out of this Thanksgiving break. I'm speaking with reporter William D. Cohan about his book, Power Failure, The Rise and Fall of an American Icon. This book is a corporate autopsy of GE, General Electric, one of the biggest and most important American corporations of the 20th century. If you've enjoyed anything in the business category, whether it's the conversation on SBF and FTX, or just the broader set of scandals that have really befallen corporate America of late, this is a really great tour de force for understanding how the corporate world works and how we could look at similar stories that are unfolding today. Hope you all enjoy this conversation. William Cohan, welcome to The Realignment.
Thank you for having me, Marshall.
I want to start with a question I think will level set for folks, even if they aren't deeply invested in the story of GE. It seems like right now we're in this period in the American business world where narratives are just shifting rapidly. SBF is the hero, he's the savior, he's above board, and it actually turns out he's not. Insert Elizabeth Holmes reference, next Steve Jobs, now going to prison. And in the case of GE, when I was growing up, 1990s, 2000, this is just like in its prime company, American innovation. And then we discover via books such as yourselves that actually GE was not doing as well as one would think it was. And now today, it's sort of being sold off for parts. So do you think there's something to this idea that right now we're in this golden age of business narrative resets? Or is that just kind of like a presentist bias? And actually during the 70s, 80s, 90s, everyone's always kind of screwing around.
Well, there was a famous, I believe, Austrian economist named Joseph Schumpeter, who wrote about creative destructionism, and that the seeds of a company's destruction are planted, early on, and it's just a question of time before they grow into full-blown, oaks that, take the company down. I mean, I think Jeff Bezos once told the troops at Amazon that it's just a matter of time before Amazon disappears and is no longer. And so, their job is to try to, stave off the inevitable destruction of the company as long as possible. So, look, companies have been going in and out of business forever. That's probably the rule, not the exception. Wall Street has always been a dangerous place, and people forget that. I mean, there used to be, thousands of brokerages, firms, for instance. I mean, I remember once upon a time when the Wall Street Journal would publish full-page ads called tombstone ads, appropriately enough, which sort of heralded, a recent big, debt or stock underwriting. And then it would list all of the underwriters on the page, from the biggest to the smallest, going from the upper left to the lower right. And then sometimes, like a big offering would have 100 plus underwriters. Now they don't even do those ads anymore because, there are so few underwriters left that it would be obvious to everybody that Wall Street has become an oligopoly, a cartel. And that's not the kind of advertising that, Wall Street wants people to focus on. So, this has been happening for a long time. But yes, there have been a lot of strange things recently. So I do agree with that. I mean, in the space of, 3 weeks, you have, supposedly the world's richest man, Elon Musk, closing on his ridiculous deal to buy Twitter, and then having a combination of financial calamity with operational calamity and, a potential disaster, a $44 billion disaster is in the offing. And then the next week you have supposedly the richest guy under 30, SBF, who seemed like crazy, but, mini, Albert Einstein. Next thing, he's blowing up his company and people are like scratching their heads like, how the hell did that happen? So you have like the world's richest guy and the world's richest guy under 30, in the process of blowing up their companies, within weeks of each other. Very odd.
I want to play around with the Schumpeter reference of this idea of seeds eventually transforming into or growing into the oaks that destroy a company. So in Power Failure, you're telling a 100-year plus history of GE, and especially in a couple of the book reviews, there's this discourse around: is it Jack Welch's fault? Is it Jeff Immelt's fault? But to a certain degree, especially regarding the financial chicanery and kind of the priorities of the firm, could one argue that those seeds were planted maybe in the 19th century or the early 20th century? Like, where would you see the seeds metaphor applying to GE?
Yeah, it's a great question. I mean, you could argue that the myth started getting created right from the start. Myths are, of course, not the same as the seeds of destruction, but they're a first cousin, perhaps. So, the first myth, of course, about GE is that it was, created by Thomas Edison. I mean, that's a great story to tell because, of course, Thomas Edison is supposedly one of America's greatest inventors, and if he, created GE, then therefore, you can't have a better DNA strand in your history than Thomas Edison. Unfortunately, as I discovered in researching this book, it's not true. Thomas Edison created a company called Edison General Electric that was one of several companies that provided the technology to create electrical power. And then creating the grids under which that electrical power could be delivered to customers. I mean, you have to remember there was a time when there were no electric grids, let alone, sources of electricity. And so not only did you have to, come up with the technology that created electricity, in a form that wasn't just, Benjamin Franklin holding a kite with a key on the end of it, and waiting for lightning to strike. You then had to create the grid to deliver that power to customers and convince them that it wasn't going to blow up their business, literally and figuratively. Fires were set as a result of these electric grids. So it took a while for that to all kind of work its way out. But, Edison created Edison General Electric, and he got as his venture capital investors, J.P. Morgan, the man, and Henry Villard, who was a venture capitalist who then became a railroad industrialist, but by the time of the 1890s was the CEO of Edison General Electric, with Thomas Edison sort of being, on the board and a shareholder, but sort of moving on to other things. Then there was this guy named Charles Cohan, who grew up in Maine and then moved to outside of Boston to Lynn, Massachusetts, to work for and then take over his uncle's shoe manufacturing business. He decided, he wanted to get into a sexier business. And so he ended up buying this company that made, a similar product to Thomas Edison's company out of bankruptcy and moved it up to Lynn, Massachusetts, and then actually did a pretty damn good job of providing electric power and the grid to New England. And then that company was backed by a bunch of venture capitalists in Boston. And then in 1892 they decided to merge the two companies, with Coffin's company being the far more successful company, not Edison's company. Edison opposed the merger. He didn't want anything to do with it. He thought it was a terrible idea. But J.P. Morgan and Henry Villard did it anyway without him knowing, and that reduced him down to becoming a very minor shareholder, which he then sold his stock and moved on. And the new GE became the CEO of the new GE was Charles Cohan. And then just to fully answer your question, literally the next year, 1893, that was 1892. 1893 was a major financial crisis in the country, and GE almost went out of business and ended up it had too much debt. I think it had like 10 million of debt, which was too much at that time. Seems laughable now, but whatever. And it ended up having to buy back its debt at a discount, with the final approval coming from J.P. Morgan, the man who was, up at his, lodge in Maine and sort of incommunicado, and they were sort of waiting on his decision. GE was teetering on the edge, and then he finally gave his decision that they would put money in to make it possible for GE to buy back its debt at a discount. So that that was the talk about origin. I mean, that could have resulted in no GE very quickly, as opposed to a 130-year GE that took 130 years for it to end up sort of getting back to where it could have been in 1893.
So the key thing then is this myth that the cousin of the seed is that there's almost inherently in GE's DNA this spirit of innovation, this ability to move into different markets, kind of in the way that you would think of Thomas Edison is doing. To what degree then is GE then at its peak? Like when would you say is peak GE? Like when's the best confluence between that idea of Edison's company and the American century and inventing all these different technologies? What's the peak?
Well, I mean, we being Americans, we tend to like to keep score by looking at stock prices and stock market value. So then, if that were the case, then the peak was probably August 2000, when GE was worth about $650 billion, the most valuable company in the world. When Jack Welch took over GE, it was, a very highly respected, long-standing, innovative, technologically advanced company, sort of the, not only the creator of the light bulb and the electric grid, but the jet engine. It was one of the first manufacturers of electric cars and X-ray machines, and to say nothing of sort of a leader in providing all those major appliances that we take for granted, whether air conditioning or refrigerators or whatever, television sets. Sort of you name it, it was ubiquitous. But it was also an important but a relatively benign company, if you will, although there was a time when it manufactured nuclear power plants, and it was a big supplier to the military industrial complex. But when Jack took it over in 1981, it was worth about $12 billion. So he took it from $12 billion to $650 billion, which is a pretty major accomplishment. Tim Cook took Apple from $300 billion to $2.5 trillion that it is now. Tim Cook has probably created more shareholder value than anybody in the history of the world. For his time, Jack was the Tim Cook, I guess, of his age. I mean, Jack had created more shareholder value than anybody else, because GE was the most valuable company in the world. It was the most respected company in the world. Jack Welch was, named the manager of the century by Fortune magazine. So in the 20th century, so I would say sort of right at the time that Jack was getting ready to leave GE, GE was at its peak.
And this is where I'm interested in your answer as a chronicler of the history here. You kind of hinted at this with, Americans liking to keep score via the stock market. And obviously there's this big debate about shareholder primacy. And is that really like the best marker? When would you say, separate from the stock price question, GE was at its most innovative and truly kind of era defining? Because the GE of 2000, especially considering where GE is today, obviously wasn't the GE of, let's say, the 10s or 20s, 30s, 40s, 50s, 60s. Like, when would you say, like, from your personal perspective, GE is at its most compelling?
I mean, I think it's a good question, but sort of a hard question to answer, because, it depends, what your perspective is, where you stand depends on where you sit. what's important to people at a given period of time. I mean, obviously, in the 1890s, electricity and electrical power, and replacing candles and whale oil, in your people's homes, and heating their homes by electricity, all those things were very important. So, right from the bat, GE was a technological a leader, and creating, if you watched that, stupid show on HBO, The Gilded Age, I think in one of the early episodes, there was a scene where everybody was sort of congregated for a big, exciting event in Lower Manhattan when they were lighting up this, couple of blocks of Lower Manhattan for the first time. And it was a big event, and all of high society in New York was there, and that was GE lighting up, the electrical grid in Lower Manhattan. It also provided, electricity for the subway system in Manhattan, and then all of New York City. I mean, it was a pioneer in the creation of electric cars, more than 100 years ago. But of course, back then, electric cars, had many of the problems they still have today, which is the batteries do not last for very long before they have to be recharged. And then along comes, Henry Ford once worked for Thomas Edison on electric cars, but then Henry Ford, came up with, then oil and gasoline was discovered, and it was much cheaper, and the combustion engine replaced the electric engine. What's a jet engine? A jet engine is really just a big power, plant turned, in a different direction, right? I mean, it's just a huge source of, and GE is still the leader in jet engines, and in innovation in jet engines. It's creating a jet engine that, relies on hydrogen, which is an abundant source of energy and relatively, pollution free, or electric engines that run on planes. Again, all these medical equipment and devices we take for granted, starting with the X-ray machine and moving into the MRI machine and the CAT scan and all that. All of that is GE. GE created these huge locomotive engines that run trains all over the world that we, take for granted, or did. I mean, now the whole company is, splitting up and dissolving. So the height of its technological power, I mean, in many ways, it's always been a technological leader. I mean, I think what happened, of course, is that GE's technological and industrial prowess made it not only a leader in the stock market, but a leader in the credit markets. And it had a AAA credit rating. And then Jack Welch came along and decided that GE Credit, what became GE Capital, could be a source of huge profits for GE, because he could arbitrage GE's AAA credit rating, borrow really cheaply, like about what the U.S. government pays to borrow, and then lend that money out, very expensively to companies that couldn't get financing elsewhere. So, GE Credit started very practically in the Depression as a way to provide financing for people who wanted to buy GE's products, like dishwashers and washing machines and refrigerators, and couldn't afford them during the Depression. So GE would finance them. And over time that evolved. That was a relatively small business until Jack decided, when he was running that business, in the late 70s, before he became CEO, that he could arbitrage GE's AAA credit rating, borrow very cheaply, and then lend that money out, dearly. And at one point, GE was the largest issuer of commercial paper in the world. So commercial paper is, of course, inexpensive, cheap, short-term, inexpensive, unsecured financing. And that at one point, over time, GE Capital became, as much as 40% of GE's earnings, and then under Jeff Immelt, 50% of GE's earnings. I spent 2 years at GE Capital from 1987 to 1989 after I got out of business school. And, I was financing leveraged buyouts. I'd been a former journalist who went to get my MBA at Columbia and went to Wall Street and was financing leveraged buyouts. How absurd is that? But that gives you a sense of sort of the freewheeling, entrepreneurial, kind of exciting nature of what GE Capital was doing to make a ton of money, and that helped GE achieve its earnings every quarter. And when Jack Welch told Wall Street analysts that he was going to make a certain amount of earnings every quarter, having all these billions and billions of assets at GE Capital helped him to do that. And that gave him a lot of respectability on Wall Street, which helped the earnings grow, which helped the stock price increase, which became a virtuous circle, until basically it kind of began to fall apart, 4 days after Jeff Immelt took over GE. Jeff Immelt became the CEO of GE on September 7th, 2001. And then on, September 11th, 2001, the world changed.
What do you think of then? So 2 questions here. I'm interested in your thoughts on Fortune or Forbes, one of the 2 F business publications, labeling Jack Welch the manager of the century. Like, what do you think about that designation 20 years later? And then it's also just interesting to use the word manager in the CEO sense, because it seems that especially post 2008 financial crisis, where tech becomes a bigger centerpiece of the American economy, I don't think Elon would want to be known as like a great manager. Mark Zuckerberg would not be thought of as a great manager. Seems like a CEO today at their best is more visionary in terms of what they're actually doing. So what do you think about those 2 dynamics together?
Well, I always thought it was kind of strange that I think it was Fortune that named him manager of the century as opposed to CEO of the century, because of course he was a CEO. I don't know what kind of message they were trying to convey by that, but I would say he was also a great manager in the sense of managing people, inspiring people, getting them to overachieve, getting them to work harder than they normally would. For a long time, GE was considered like, management central, right? I mean, just creating one great CEO after another. And that's, there's still, sort of the GE Jack Welch coaching tree is still, populates American capitalism, to this day. And of course, the irony of that, much of that would happen at Crotonville, their management training center up on the Hudson River, which they just announced that they're putting up for sale. I think Jack really inspired people. I mean, everybody that obviously when I was working there, he was, considered like a deity. And he hadn't even achieved, by the time I left in 89, what he would achieve, a decade later. And I think, that there's a lot of revisionist history going on now, regarding Jack. David Gellis wrote this book.
Previous podcast guest to note for listeners, but would love to hear your perspective on that.
Yeah, well, it's, he wrote the book, The Man About Jack, the Man Who Broke Capitalism. Now, I like David. I've met him a couple of times. I respect what he does at the Times. I don't understand that book. I confess I didn't read it because I didn't want that in my head as I wrote my book. But, I spent hours interviewing Jack and many, many more hours interviewing people who worked directly for Jack. And then I spent, months, researching GE, the whole history, including obviously the period when Jack was CEO, and I worked there for 2 years. So I felt like the thesis of his book made absolutely no sense to me. The Man Who Broke Capitalism. Now, I don't believe it's true. I don't believe capitalism is broken. I mean, is capitalism broken? I mean, it's a nice thing to debate, and I'm sure, progressives, on MSNBC can, go crazy for that topic forever if they were given a chance to do that. But I mean, that's absurd. Obviously, capitalism is not perfect by any stretch of the imagination. It may have huge flaws, but it's also the way the world works at this point. We'd have none of the things we take for granted if it weren't for quote unquote, capitalism. And there's lots and lots and lots of things we take completely for granted that So I don't agree with the premise that.
So quick thing on that. Then I think having read the book and interviewed David, I think what one could say, aside from your point that the word capitalism is misapplied, let me say, I think the fair reading would be that Jack Welch's tenure at GE introduced longer term negative dynamics to corporate America, restructuring, mass layoffs, financialization, preferencing that, 2000 stock price over whether the company was actually internally healthy. What do you think about, I think, that a little more nuanced articulate? I agree with your point about the title being overwrought, but what would you say to those specific points?
I don't actually agree with that. I mean, the SEC, I mean, I don't know when the requirement for quarterly reporting was instituted by the SEC, but the SEC came about during the Depression, right? So I don't know when the idea of quarterly reporting came in. Maybe that was the way it was from the start. I just don't know. But it certainly wasn't created by Jack Welch. Jack Welch was the CEO of GE, and GE was obligated, as every publicly traded company that is registered with the SEC is required to report quarterly. In the UK, they report every 6 months for some reason. Here we report quarterly. So every company has to report earnings quarterly, and research analysts cover a lot of companies, not all of them, on Wall Street, especially the big ones. So GE is, had a massive following among stockholders, retail stockholders. It was an original member of the Dow Jones Industrial Average. It's been around, as we talked about, since 1892. I think it's been public since 1892. So it is always being, watched very carefully by Wall Street, by retail investors, by pension plans, the endowments that own the stock. So, Jack, like every CEO, and being the CEO of GE, it was only a heightened responsibility, had the responsibility to report earnings on a quarterly basis. And the convention, for whatever reason, became sort of giving an indication of what a quarterly profits would look like in advance. And then if you missed them, then you were vilified and deified and the stock cratered. So Jack took very seriously his responsibility of making the quarterly numbers that he told analysts he would make. Now, he was lucky. Now, you may call it the financialization of America, but that did not. He had GE Capital, in his stable. He could, sell a loan. He could sell warrants. He could sell a building, that GE had owned or financed, to get profits, to, make sure he made the numbers that he promised that he would make. A lot of people think that was, quote unquote, manipulating earnings. I think it was just being a responsible CEO who promised investors that he would make a certain amount of earnings and then achieving them, because the opposite of that, failing to do that, was, beginning sort of the start of a devastating pattern that could result in, people losing a lot of money and him losing his job or whatever. So, that did not start with Jack Welch. The financialization of America did not start with Jack Welch. He was as clever as many people have. I mean, look, his ride as CEO corresponded nicely to, a huge bull market beginning in 1982. But he realized that GE, he was selected as the CEO because he wanted to, revolutionize GE, and it had become staid and bloated, and he told Reg Jones, his predecessor, that he intended to sort of blow up what Reg had created, and so that meant, getting rid of the bloat and layers of bureaucracy.
Was it the quote from that the previous CEO said, "I'm offering you like the Queen Mary"? He said, I want to turn this into a speedboat."
Yeah.
I like that
right.
quote.
Yeah. And so the way to do that is, look, this is, if you want, it's very Darwinian. I mean, it is, and it has its downsides. And I don't mean to, I've certainly been the victim of Wall Street's busts and booms. I got fired from my job at JP Morgan Chase in 2004 for no reason whatsoever, other than I was old and in the way, and that then I became a writer. So capitalism is a tough taskmaster. It's rough, and maybe there's a better system out there, and maybe we should conceive of it, and maybe we should, the 9 billion people on the planet should do everything in their power to throw off the chains of capitalism and try something else. But as far as I can tell, there isn't a replacement for it yet, and nor is there anything that anybody seems to be championing that people are adopting and is a better way to go about it. I mean, capitalism is very, Darwinian, but it's also very good at allocating capital and labor to where it can have its highest and best use, and return, invest or get a return on investment for the people who take the risk of providing that capital, and creating a lot of wealth. Maybe too much wealth in the hands of some people, yes, but generally, more people have sort of risen out of despair and poverty as a result of capitalism than any other system. So until we come up with something better, that's what we got. And Jack didn't create it, and he didn't break it.
Here's what's interesting, given I'd say the helpful revision is you're kind of revisioning the revisionist history, right? Like, so we're kind of going in a circle back to.
I've done the research. David Gellis didn't do the research. He had a thesis that he wrote down a polemic for whatever reason. I'm not sure why he did it. I haven't talked to him about why he did it. But I just think it was completely flawed. I mean, I think if you're a journalist, which David Gellis is, and I don't mean to, attack him in any way, but I mean, if you're a journalist, you can't write writing. You can only write reporting. I could have gone off and said, Jack Welch, was the worst, thing since sliced bread, but that's not what the reporting bears out. The people who worked for him loved him. The value of the company, which is, the way we measure these things, get me a better way to measure, went from 12 billion to 650 billion. The company was the most respected. He was the most respected CEO. It was the most valuable company, the most innovative company. It was like, Google, Apple, Microsoft, all rolled up into one for a time being. And, I think it's fun and intellectually stimulating to, revive, we love in this country to build up our corporate leaders, our politicians, and then we love nothing better than to tear them down. We do it all the time. We've been doing that for generations. So, Jack Welch was ripe for a takedown. I don't want to be the one defending him necessarily. I just want to be the one sharing with people what the reporting actually shows and the research.
So that's it. So you wouldn't say then, do you have a thesis then for this book, or it's a story? Do you know what I mean?
It's a story. It's narrative nonfiction. It's like the question I was trying to answer is there's a dead body on the ground. How did it get there? Which is the same thing I tried to answer when I wrote my book about Bear Stearns, when I wrote my book about Goldman Sachs, when I wrote the book about the Duke lacrosse case. What really happened and why? Well, I can find that out. I know how to do that. I can go and interview as many people as possible. I can go to the documentary evidence. I can go to the historical evidence, the journalistic evidence. I can assemble it all, synthesize it all, and figure out what really happened. That's my job as a reporter and a writer and an author. And it's 800 pages. So, I think I did my job. And, it would have been far easier to say, you know what, time to take down Jack Welch. Let me just do that in a polemic way and put a fancy, a title on the book that'll get clicks and, do that. But, that's not what I want to do. That's not what I do.
I'm curious then for your thoughts on business journalism today. Obviously, a lot of folks are bandying about once again, was this Fortune? Was this Forbes? Sam Bankman-Fried? Is he the next
Both.
Warren Buffett? Do you have what would just be your assessment of that space, considering these big stories we mentioned at the top? Is this just complicated? Are people sort of moving beyond their lanes to a certain degree? It's Forbes's job is to put people on covers. So I'm not going to really treat that as the dunk that people could maybe do. But what do you think about that?
Yeah, I mean, you're right. Every magazine that is still printed, a diminishing number. Obviously Vanity Fair is not anything like today, the Vanity Fair that I used to work for 13 years. There's a cover. People have to put things on the cover. And they like to put the latest shiny object on the cover. And what could be a shinier object than Elon Musk or Sam Bankman-Fried? I mean, it's just like a printed version of clickbait. They sell, they put people on the cover so they can sell the magazine. I know that's a cliche. And of course, there's much more to it than that, of course, because it's not just the cover. But, what's going to sell more magazine? If you compare Sam Bankman-Fried at 29 years old to Warren Buffett at 91 years old, when, Warren Buffett has had, some 60 plus more years of experience and lived experience and proven success year after year after year through cycle after cycle after cycle. Why are you doing that? You're doing that because you're sort of posing an exciting and intriguing question that you hope people will be motivated to buy the magazine and read the story or click on the story or whatever it is. And so, I mean, it's just amazing how often these business publications just get it wrong and miss the boat completely. But, in fairness to them, it's hard to do it kind of in real time. It's easy, in hindsight. There are people who saw, the 2008 financial crisis coming, and my friend Michael Lewis wrote a book about that. And now he's going to write a book about, I assume, about SBF. And so, that'll be a great success for Michael, and he deserves it. And, he's at the right place. He has a knack for being at the right place at the right time. But the same thing happened with GE, lionizing these guys. They're constant. I mean, the number of Harvard Business School cases about GE's, industrial and financial prowess are legendary. Has there been a Harvard Business School case about the destruction of GE? No, of course not. There should be a Harvard Business School case, literally encased in glass, about how, which is, what my book is about, how GE, all fell apart.
I'm curious then, because I want to go back to this idea of folks building up and tearing down. As you're telling this history, as you're telling this story, to what degree is the blame game useful, necessary, kind of missing the point? Because to your point, you reference this, right? Like, Jack Welch takes over during the bull market. Jeff Immelt takes the reins 4 days before 9/11. If the timing's been entirely different, it's easy to see a world where we'd be talking about some other CEO. There are a bunch of CEOs that Jack Welch was, or pre-CEOs who Jack Welch was competing against. How do you think about this debate over, is it Jack Welch? Is it Jeff Immelt? How do you think about that?
I had a piece in the Times yesterday where, I wrote about the importance of the selection of the CEO. And one thing Jack told me when we first met in August of 2018, so, not that long ago, and, after Jeff Immelt had been replaced as the CEO, was that he had, fucked up, was his words, in the selection of Jeff Immelt as his replacement. But I said, Jack, you selected him. So, isn't that your mistake? And of course, he owned up to it. It was his mistake, and he was taking responsibility for it. He didn't see it at the time. Did Bob Iger see at the time that Bob Chapek was the right guy to succeed him or the wrong guy? I'm sure at the time he thought he was the right guy. And then pretty quickly he decided he was the wrong guy. And then 2 years later, he's out and Bob Iger is back. Now, that didn't happen at GE, but I would say that, Jack told me that, it was like 7 years in before he realized that he had made a mistake with Jeff. And at a company like GE, unfortunately, you're not gonna correct that mistake quickly. You're not gonna do it like Disney did. I mean, obviously, maybe if it happened today, you'd do it. But look, they've had their new CEO, Larry Culp, since October 1st, 2018, 4 years, and he's done nothing. The stock price has done absolutely nothing. He took the previous CEO, John Flannery's idea of breaking the company up and, is in the process of implementing it, claiming that as his own intellectual capital, which it wasn't, and, taking for himself $100 million windfall, as well as 4 years of contracts that no other GE CEO had. But he really hasn't done anything for shareholders. And, he's still there. Nobody's talking about getting rid of him, although they are talking about, splitting the company up, and they will split the company up. So, the blame game is like a fun thing. I mean, I did this corporate autopsy. Obviously, I think I, succeeded in figuring out, who's responsible and what happened every step of the way. I mean, Jeff Immelt was there for 17 years, so he gets the lion's share of the blame, and I think he knows it, and can almost take responsibility for it. He doesn't quite do that either in talking to me or in his own book. He tries, and he
Did you read
gets
his
sort of
book?
the way that. Oh, of course, yes.
What did you think of the book?
Well, as I say, I think he, tried to take some of the blame for himself, but he was also quick to blame others by name, which sort of surprised me, because when I would talk to him before the book came out, when we would get to somebody he was not feeling particularly kindly about, he would insist that what he was going to say about them was off the record. So, of course, I had to respect that. But then in his book, he named them and shamed them. And I thought, oh, thank you, Jeff. I'll just quote from your book now. So he was not shy about blaming others. He also tried to convince me over and over again that he had kept the best people around him and he didn't lose people. But in fact, if you look at the evidence, he lost a lot of talented people, mainly because he pushed them out, because he didn't, they would try to make an argument to him and he wouldn't listen to them. And he didn't want somebody who wasn't, on the team and rowing in the same direction. He didn't want to hear from dissenters. And so he lost a lot of talented executives that way. The truth is that Jack made mistakes. He admitted mistakes. He was willing to listen to dissent. He, again, objectively speaking, going from 12 billion to 650 billion is, what we reward CEOs to do. Jeff Immelt took the company from about there to something a fraction of that, and he made lots of decisions, and I think a lot of the decisions he made were proved to be wrong, and I think he has to live with that. He could have made other decisions, and he didn't make other decisions. He made the decisions he made.
I'd say the last big question here, it seems like the GE story resonates and produces so many books every few years about it, because GE is really the emblematic company and industry, and set of industries of the 20th century. Would you say, and this isn't asking you to say like, what's a company that's like valued highly right now that's going to collapse like next week? That's not the question. The question is, do you see there being a similar company / industry in the 21st century that kind of fills the sort of the space in the American imagination regarding business? I mean, I could probably say it's tech. It would be tech, but it's hard to see, especially with the tech stocks kind of crashing, there being just one big GE-like player.
Well, GE was a conglomerate, right? It was heralded as a conglomerate. It was held up on a pedestal as a conglomerate. It was admired. It was sort of the last of the great conglomerates. The conglomerate era was long over, and GE was still, chugging along beautifully.
And could you explain what a conglomerate is, to your point about the era being over?
Yeah, I mean, once upon a time, if you just sort of assembled under one roof a disparate collection of companies that you bought through an M&A process that basically had little or nothing to do with one another, like no synergies between them, but you just owned them to own them through some sort of holding company structure, and allowed the CEOs of those companies to still run them and produce profits and do what they do. That the collection, the amalgam of those various companies under one roof, would somehow, sprinkled with this incredible fairy dust of great management at the CEO level of this combined thing, would be very valuable and something, worth doing. Their cost of capital would be lower. The sum of the parts would be greater than them individually. That was called the conglomerate era, and there were any number of quote unquote conglomerates, United Technologies, ITT, GE, Westinghouse. At one point, Westinghouse and GE looked very, very similar. Westinghouse disappeared, 25 years before GE did? So GE was obviously able to, and by the way, it was a living, breathing organism. I mean, Jack Welch bought a lot of companies, some good, some not good. He unwound some of the things that his predecessor did. Jeff Immelt came in and unwound a lot of the things that Jack did, for better or worse. I mean, one thing I discovered that was a total revelation to me, and I had been a Wall Street investment banker for 17 years, doing M&A, and so I was like attuned to this topic. Is I thought in 1986, when Jack spent like $6.4 billion, then the largest M&A deal of all time to that point, to buy RCA, itself another conglomerate which owned NBC, that was sort of an innovation. Like Jack was saying, "Oh, I want to get into the media business. I think this is Jack used to say, well, there's a moat around NBC because foreigners can't own NBC, can't own a television network." What I discovered is that actually, after World War I, Woodrow Wilson and Franklin Roosevelt sort of forced GE to start what became RCA inside GE, because Wilson did not want the British to get a hold of GE's radio technology after World War I, which had proved so valuable during World War I, and he was afraid that the British, with Marconi, which was another company, would get a hold of this technology, and he didn't want them to get a hold of this technology and take it from the Americans. So he forced GE to start RCA, what became RCA, inside of GE, with GE owning like 80% of it and Westinghouse owning 20% of it. And then basically, 10 or 15 years later, the Justice Department, for reasons that were never really clear to me, forced GE to sell RCA and spin it off into its own separate public company. And that's what happened from like the early from 1932 until 1986, when Jack Welch bought it back.
So for the last question, I know this is kind of unfair with a 700 plus page book, but to your point about this serving as a corporate autopsy, there's a dead body. I'm going to take that for for the introduction. I like that articulation of it, but also to the Harvard Business School example. What would just be some, in no particular order, top line takeaways from this story that you'd want, let's say, a Harvard MBA to think about as they look at this story? It's also weird because, to your point, conglomerates are over, so there's no don't buy RCA isn't really an applicable lesson anymore either way.
Well, I think the main takeaway is the choice of the CEO is incredibly important. I mean, that's sort of like a truism, right? And so obvious, and yet the mistake gets made all the time. We just saw literally in the last few days. I mean, obviously, Disney replacing Bob Iger. Replacing Bob Chapek with Bob Iger. That's considered now. That board made a mistake just 2 years ago. In fact, they re-upped his contract in June. They gave him a 3-year contract extension, backdated, so he had 2 years left on that contract in June. And then in November, they can him. Obviously, Jack Welch thought that Jeff Immelt was the wrong choice after Jack selected him. So the choice of the CEO, is very important. I mean, what's going on with Twitter? I mean, that obviously Elon Musk bought it with most of his own money and appointed himself CEO and is in the process of destroying the company.
So actually, here's another question then. What about boards then? Right? Because as we're talking about selection, we're talking about Elon, we're talking about Jack Welch picking Immelt. Are boards more absent than they should be in this process? Is this being so individualized a problem? What do you think about that? There's no more board at Twitter, obviously.
Right. There's no board at there's no board at Twitter. The previous board of Twitter, of the public company, did a beautiful job, selling the company for a high price. They had no choice; they had to do it. The GE board totally abdicated its responsibility under Jeff Immelt because, I think Jeff Immelt gets a lot of the blame for that because he, anytime, going back to my point about not really being interested in dissent, anytime board members questioned what he was doing, he got rid of them. He got rid of Ken Langone, who Jack had appointed, because Ken Langone questioned him.
That's Home Depot CEO?
He was one of the founders of Home Depot. Yeah,
okay.
He wasn't... turned private equity investor. Another board member was Sandy Warner, who was the CEO of JP Morgan when I was at JP Morgan and was on the GE board. And he questioned Jeff Immelt and sort of had a different vision for who Jeff's successor should be than Jeff did. And he, kicked Sandy Warner off the board. So, I mean, that sends a very, powerful message. Just like in Candide, Voltaire's Candide, when he, a general got shot, a British general got shot after losing a battle, pour faire un exemple pour les autres. Nothing sends a more powerful message to the rest of the board that, you're not interested in what they really have to say or dissent than eliminating board members who question what you're doing. So the board just totally abdicated its responsibility. And this is like what they're supposed to do. They're supposed to keep the CEO in check. They abdicated their responsibility. And then when I was, doing my corporate autopsy, I would say about 98% of the board members that I contacted either completely ignored me, ghosted me, or never even responded. So talk about further abdicating any responsibility. Some even have taken off GE, their time on GE's board from their resumes,
Wow.
their LinkedIn pages, including the lead director of GE's board of directors during much of Jeff's tenure, Jack Brennan, who was the one-time CEO of Vanguard, who's supposedly a huge money management operation as a fiduciary for investors, wouldn't even return my calls.
Well, okay. I keep saying last question, but you keep saying interesting things. Why would someone return your call? Like, I always think about this, like, why would someone talk to you? Do you kind of like my inner PR person is like, don't talk to him. Why would you talk to him?
My wife asked the same question. Look, okay, there are people who don't talk to me. Nothing I can do about that. I don't have subpoena power. I find that some people who don't talk to me for the book, then the book comes out, then they call me up. Really? I literally just was contacted by Robert Nardelli, who was the, in the running to succeed Jack Welch, did not get selected, and then went to Home Depot and then Chrysler. I tried many times to talk to him, and he wouldn't talk to me. The book comes out. He sees my op-ed in the Times yesterday, and today he gets in touch with me. Ace Greenberg at Bear Stearns, the longtime senior partner / CEO of, a senior partner at Bear Stearns. He wouldn't talk to me. Everybody else at Bear Stearns talked to me. He wouldn't talk to me. Book comes out, calls me up and says, let's go have lunch. And then says, I made a mistake. I should have talked to you. So I don't know, so there are people who don't talk to me. There's nothing I can do about that. I don't have subpoena power. There are people who want to tell the truth about what happened because they feel it's important that story get out there. Then it's going to be written. They want to, it's going to be written anyway. They might as well, people who actually care about the truth. I know this is quaint and, kind of unprecedented these days, but there are people who actually care about that. And so they participate and they talk. And then there are the people who are just kind of vain and like seeing their name in print and like being the center of attention or like being included in the narrative and who are, happy to share their stories. So, I don't think, I think there are more people in the middle category who just live through it, believe a reputable, responsible person is going to write this story, and therefore it's going to be taken seriously when it comes out. And, better to have that be the truth or as close to the truth as it possibly can be. And one of the ways it's going to get to be as close to the truth as possibly can be is if, I participate. And so they agree to participate.
I'll just close that as a third party, it seems that if you are able to personally get Jack Welch on the record, it's safe to talk to you. Because I think there's this debate about like, should you talk to the press? You're not some random Twitter journalist slinging bad faith takes where there's nothing but downside. I think if you're able to get the folks that you can get, and I think approach the project the way you approached it, the advice would be to probably talk with you. William, this has been really, really great. I've really enjoyed this. The book is Power Failure, The Rise and Fall of an American Icon. It's a hefty read, but actually I'm gonna just continue honestly, because I think it's cool to get a book that is both telling a story that is so sweeping that it also makes it mean deeper things for other stories one would look at. So thanks a lot for writing the book.
Oh, thank you for having me and your intelligent and thoughtful questions. Made the time fly by. So thank you.
Good to hear. Thanks, William.
Take care.